Alrighty, Doc here from North America. Good morning, good afternoon, and good evening. It is Tuesday. It's the next day after Monday. And we are slowly gliding through this week, and a lot of news coming out, a lot of earnings coming out. It's always interesting, though. I'm going to mention something more about the banks. So, they love to hate Bank of America. I'm not sure why, but I keep on hearing more negative. But I don't see negative. That's the confusing part. And then when someone says, "Hey, Robin," "Hey, Janos," and then when someone says something about Citibank, there's silence. And I'm always the one around here that talks about, oh, okay, the numbers have just popped out. You can see the stock market has just made a dip. Let's go take a look at that dip. There's the dollar. We have the dollar index up on the screen at the moment. There you go. So see, X auto 0.6 up, sales X auto 0.6 up, overall 0.7 up. Okay, investors looking for, and let's go show you what the stock market has done right there. There it is, right there. Better expected numbers. So in other words, it's acting strong, like a healthier economy. Or growing economy or something like that. They were expecting 0.3 and they got 0.7. That's what it is. So that's the alleged headline number. That's the one they all stare at. September retail sales ex autos was 0.6 and estimated would have been 0.2. So in the end result, just 0.4 more, which is twice of. And so you can see right there. So the market, the S&P 500 was hanging out around the 90 area. They had an idea that it was going to be strong because they do release these numbers 15 minutes ago to allegedly the media. It goes right up there with Hunter Biden. That's it. So in the end result, as you can see, it's lost about 5 handles, nothing major, maybe 7 handles at one point. And now it's slowly grinding its way back up again. If we start seeing this support in here, we might get ourselves, it went into the sell right here. That's probably 15 minutes ago, right? That's what it comes down to. They front run the number. As we can identify it exactly. So there's 727, or in this case 827, 814. There's right there. That's when they gave the news. That little spot right there, that's when they gave the news to the media. It was at 93. The next thing you know, it's trading at 85. Okay, and it lifts up a little bit. And then the news actually comes out on this one right there. That's the release right there at, 30 on the hour. And they knock it down again, and here we are again, right back to this area here. And that's that. Now remember, the Federal Reserve in the United States is working to weaken. Yes, and we all shake our head at that one. Weaken our economy, not strengthen it. Someone or another, they think that growth is a bad thing, and it creates inflation. When in fact we've seen for almost 4 years with Mr. Trump, growth was a great thing, and there was no inflation. So obviously, we have a very old, archaic group of people in the Federal Reserve that have some backward ideas of old, not of modern economics like under Ronald Reagan and under Donald Trump. They have a whole different opinion about that. Same thing, even to some extent, under George Bush, the son, not the father. So there it is right there. You can see it in the stock market. All right, let's get out of the stock market again and go back to the dollar index. As you can see it up on J4X. And let's go like that. There it is right there at the same time. You can see it's the dollar, that scared them a little bit. It was, I guess it was it lifting? No, it was higher. And the dollar index now is still, it's been in the minus throughout the whole night and morning now. It's been through the minus. But the weekly is still holding up. And as you can see, over here on our new platform, same situation. It's breaking underneath, doing that negative gig, And you can see the green line piercing. Let's see if we do this. We will amplify this whole thing right there for the time being. You can see right there it's breaking down now, and the green line and so forth is busting down. There it is right there. It's just kind of hidden. But that's the green line going falling down. See it right there? And you can see, the product itself is sideways to down. And the weekly is still in a buy. Fast has broken, just like it has right here. You can see the fast breaking down. Over here in J4X, you've got that same situation. We got these green hinky ASCIIs getting ready to flip into the red. We've got the fast trading at 73.9, and we've got the slow trading at 68.7. So just still a little firmness there, reflecting this firmness here, and it'll start to catch up in about an hour or two. We'll probably see red if it stays right here or drops a little bit lower. And we'll probably see the fast break down and try to get closer to the 68, where it's at 74.1 as we speak. All right. So yeah, they have this archaic concept, It's the same thing like with not utilizing the options in the marketplace, where people go, wow, volatility has really exploded over the last 3 decades, and it's like, yeah. And it's been like that since the late 70s, early 80s. And it's like, that's 4 decades. And I go, yep. And I said, what happened back then? They created listed options. And so it made it easier for funds to invest and at the same time take on enormous positions. I remember when 50 million was a big number. I remember I had a friend, it was, or an ex-friend, I guess you could call them, was managing $56 million. And that was a monster number in the 1970s, $56 million. And now 56 million is a trade for the day, and it's not the fund. The funds are now in the billions, and it's all because of the option market and opening the doorway for derivatives to be used to insure financial positions. That's pretty much what options really do. They insure your financial position when used the correct way. See, not the money printing. No, the Federal Reserve is so far off its understanding of what's going on. I guess that's why we saw Mrs. Yellen and Mr. Powell and Mr. Biden walk around for almost a year and a half saying inflation is transitory. I would say that the financial understanding of the marketplace today is transitory when it comes to Mr. Biden, Mr. Powell, the head Fed chair, and Mrs. Yellen, our Secretary of Treasurer, or mostly everybody can relate to her as being the finance minister. So, they don't understand finance very well. They don't understand the derivatives very well, and they don't understand the marketplace very well. So, it just makes me shake my head. It's like, this is so unrealistic. And we know Powell knows better. He's captured by the, I know people who know Powell. And they say he's a smart guy. He understands all this, but he's following his fearless leader, Mr. Biden, at the moment. If Mr. Biden says raise rates and beat inflation to death and slow the economy, that's what he's going to do, which is not exactly your classic Fed chairman anymore. The Fed chairmans used to be independent of the presidency. Let's put it this way: Mr. Powell didn't pay attention to Mr. Trump. That's for sure. And when Mr. Trump said, hey, why are you raising rates so fast out of nowhere on me? The economy is looking fine, of course, but let it go for another quarter. He had no problem. The moment Mr. Trump got elected, he raised the interest rates. He wasn't even in office, and he was raising rates on them. So, they're very unskilled when it comes to understanding the economy and the modern financial markets. They're more involved in the old style, little socialism, little, Big Brother runs everything. One size could fit all if you just paint it the right color, that type of attitude. Strange, but true. All right, so there's the dollar index, and the reason the dollar index is staying so firm is our interest rate. Let's take a look at the 30-year bond here on the chart here. There it is right there. There's the 30-year bond. See, it's dropped down. When a bond price goes down, interest rates rise. So that's what the confusion there is always. That's why they create things like TLT, where it follows the interest rate, not the bond price itself. When looking at the bond right here, the 30-year bond, it's been marching down, which means interest rates have been rising. And we had a little relief of it here, and that's why the dollar index, as you can see right here, was trying to break down. They were starting to sell it down right there. And that's what that upward motion does, because that's the interest rates dropping. And so right now, interest rates are rising with the price of a bond going down. That's how that works. And so what we're getting is people moving towards the dollar side of a pairs trade in currencies, because interest rates are rising, and they try to park their money in places that make money, not where they lose money. All right, let's jump over to the euro. See what the euro is looking like this morning. I saw it's playing with the daily buy last I saw. Let's see. Right there. There's the euro. Oh, it was. This morning it was making a challenge to it with no problem. It's still over by a little bit. See it right there? Let's put it up on J4X too. There it is. So you see right here, the euro is trying to lift. Let's see, why don't I see that? Okay, there they are. You see the fast is at 27, the slows at 32. So that's showing us weakness, just waiting for this to turn red again, I guess. And that's what you can see right here on ours. We've got a green dot up in there. So it was starting to lift up. You can see right here, it was trying to lift up. We were, was starting to get some buying going on. You can see the last couple of days right here where, it pressured it, and the interest rates looked like they were coming down, and that started to, once they popped it right here the last day or two, and you can see we even in the bond. Let's see if we can put the bond back up there real quick. See, the bond even went into a daily buy 2 days ago. And that meant that obviously interest rates were coming down, and everybody was starting to get excited, and we were seeing that strength in the pair on the euro side versus the dollar side. But now, with this down challenging the 2-week low, and that is almost like what that is right there, I believe, is a 40-year low right there. Oop, doesn't, yeah, so that's a 40, right there is a 40-year low. 40, not 4-year, 40-year low. So, almost half a century, 40 years. And so that's the pressure you're seeing on the pairs. That's why the pairs have been sloppy. They've not been, every time they look like they're trying to get some strength in them, they fall apart against the dollar. And the dollar, because the interest rates have been dropping, every time they think that this is it, this is the low of the interest rates, yeah, they try to go scare them again. Now, it'll be interesting to see if we can go challenge this low here in the bond, and this must be I would imagine that's yielding close to 5%. Now, some of the short-term interest rates, let me put a short-term interest rate up on the screen. There it is right there. Here's the U.S. Treasuries. Let's put that up on the screen there. There it is right there. And as you can see, the 30-year bond is yielding almost 5%. It's at 4.9. The 20-year is at almost 5.2. It's 5.16. The 10-year is at 4.8. And then we drift down, and then the curve shifts again. The 2-year is at 5.5. It's at 5.15. But the highest rate they're paying now, this is why currencies are running hot. They're paying 5.42 for 1 month. 5.4. Oh, they just went to 5.42. It was 5.418 or something like that. Just made a tick. And so that's the interest rate itself. Okay, that's not the price. And so you can see here, there's the 6 month out is 5.59, almost 5.6. So a lot of people believe that it won't finish until we hit the 6 point there, something like 5.98 or something like that. Almost touch the 6%, and then a lot of money managers believe that that's when interest rates are really going to finally peak out in the 6% area. And the reason for how they rationalize all this is basically is that and here's other government bonds. You can see here the 2-year in Britain is at 4.92. That's the highest for it all. Oh, wait a minute. The 30-year is 5.97. So that's the highest, the 30-year. And you can see the German market, the high is 3.5, almost 3.1 basically. And the 10-year is 2.85. So they're not they're really not, when it comes to the interest rates. Let's see, Japan is still, I believe, minus. Here's Japan. Nope, no more minuses. We were showing. Oh, wait a minute. Yeah, the yield. There's the yield. So the 3-month is still a minus in yield. In other words, you don't get interest when you buy a 3-month. You have to pay interest. Now the 2-year is at almost 1. 0.059, and then there's the 3 years at 0.13, and you don't get to a 1% bond basically until 15 years out. They'll give you 1.3%, and then 20 years 1.58, and the 30 years heading for the 2 area, I guess you could say, is at 1.755. So it's 1 3/4 interest they'll pay you, but the 3-month is still a minus. Let's see, what's Italy doing? There's Italy. The 2, they're showing you a 2-year, and they start off at a 2-year and keep on rolling to the 30. The 30 is yielding to 5.3, and the reason for this is inflation's around 6%, 5.5%, 6% overall. I think the core rate is 4.7 or 4.8, and they think that core rate will go out by the end of the year somewhere around the 5s. And so bonds are trying to anticipate where they believe the core interest rate is at. And that governs pairs trades. I know it sounds a little, it's always a little far-fetched when we're out there talking about options and talking about interest rates. These all influence these are all influences on the pairs trades. And, combination of the pairs trades, they do look at inflation in other countries. They look at employment in other countries, and they look at the growth in other countries. And when those things are kind of small or anemic or not doing very well, the only other thing they can look at is look at interest rates. Interest rates are usually governed by them to begin with, so it's kind of like, it's like an index itself in a sense. You look at the interest rate, it tells you what the rest of the economy is really thinking and doing. And boy, what I'd love to see is, like, there's Brazil. Brazil is one of the hottest. I mean, they got 11% 9-month bonds. 11%, yeah, and 1 year is 11%. They can't even reflect like Turkey. There's France. Let's see what France is looking like. I think France is in a relatively norm, like a little bit between the Germans and the English. 3.9 is the 30-year, and the 1 year is at 3.8, and then the 2 years is 3.4, and the lowest, I guess, is right there, the 5-year at 3.179. So that's why we look at these things once in a while. All right, from there, let's go back to the euro. Take a look and see what the euro is up to this morning. And as we can see, it keeps on. Let's put it up on this screen here too. As you can see right there, it is firming up just a little bit again. It's coming off its lows. Same situation here. We're at 2.8 now instead of 2.7 on the fast, and we're at 3.2 on the slow. So it's trying. It's got that green going on. Let's put it up on the new platform. Where's that at? So it's 6E. 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 There's Canadian. 6E. 6E right there. There it is. As you can see, it's trying to lift up right there. This is the futures contract. This is not the spot. And you can see the daily is still not joining in, and the weekly is still not joining in. And it has no interest. Now, this is the futures contract, not the spot, as I say over and over again. We're waiting to get better data feed for the spot. and then we'll be showing you the data feed for that. All right, from there we'll go over to the British pound. And there's the big GBP. And now it does not seem to be fooled whatsoever. It was trying to lift. It was up in here, and I saw it playing with the daily buy at one point, but not anymore after that news today. And you can see the weekly is still the way it's been on the sell side since the 127 area. And here we are at the 121. Let's put it up on J4X. Right there. And you see 4 days of selling. Basically same thing right here. Well, we can't see that. Right here, 4 days of selling. And over here, it has the 3 days, and they haven't put the today hasn't jumped in there yet. So we're still waiting for them to move this stuff over and straighten that out for me. They will, and that's why this is a beta. That's why it's a beta. All right, so the cable, is doing the same old stuff, and it refuses to get into the weekly buy too. You can see the fast is trying to get up just like it is right there, but it hasn't broken it yet. And so it's battling to try to get going, but combination of the interest rates and the inflation and just all that and the lack of growth and throw in a little sprinkle of geopolitical issues, and the next thing you know, it's still not going anywhere. All right, let me just take a sip of my tea since we're almost halfway through the webinar. I guess you could say we're over a third through. Cool. All right. And we're always willing to answer any questions you want. We can get into the options and talk about that. We will go even deeper. But we're always looking at the options, and we look at the way they treat the different products. And that usually gives us a heads up of what kind of future movement is coming to an individual product or so. Alrighty. So from there, that's the British pound. Let's go over to the Swiss. Right there, there's the Swiss. The Swiss, when it's going down, it's gaining against the dollar. And you can see here the fast is at 21.6. And the slow is at 24.7. So they're, it's showing that weakness of the dollar against the Swiss. That's what that shows. Because as the Swiss goes down, it's gaining against the dollar. It's slided in right here, and there it is right there. And it's 3 days in a sell. Is it 3 days? 2 days in a sell at this point. And the pressure is on, and the weekly is trying. You can see the fast is broken down, heading for the manifold no less, in the minus side. And the slow is underneath the manifold on the plus side, but it hasn't broken down yet. Just like many other products, they seem to want to go in one direction, and then the weekly keeps on saying, be careful. Don't get brave too fast. And that's the beauty of our mathematics, how it's consistent over the decades, the 45 years it's been doing the same thing over and over again. So, and then we'd look at it right here on our new, here we go. There's one there. So you see that breaking down there, and there's that weekly we were talking about. And then we go over and put the Swiss on the new platform, and it's the Swiss future since we can't get the cash accurate yet. And it works in inverse relationship because it's an American futures contract, and the thing does a reverse calculation. So instead of dividing into it, it multiplies. So as a percentage. And so when you're looking at, like you're seeing that 0.90 on the spot, so they're looking at it as like, was it like 110 or 11, something like that. So in other words, they make it like 200. And so 90 becomes 110 and change. And the futures contract, you'll be able to see right here, since it has a premium and it's a December contract, it's higher, trading in the 111s. It's carrying a premium. So in other words, as this thing is rising, it's gaining against the dollar. And as this one over here is descending, heading down, it's gaining against the dollar because it's the spot at 0.90. And over here, it's trading at basically 110. I think we can could put the spot up there just for the second to see what it looks like. but it's big. It's going to be the same as J4X. So we end up using the futures contract at the moment. Let's see if I can find one. No, don't see it. I thought we had it. I probably erased it out. We've moved away trying to use the cash contracts. All right, so that's the action we're seeing in the futures. So that, in other words, that's trying to say just like we do over here. It's just inversely. It's trying to break down. Now I'd like to see this make the rest of the move and break into the sell. Sometimes I believe, in many ways, over the years I've watched both the futures contract and the spot. A lot of times the futures contract leads technically. You know, it does. Not sure why, but it does. I guess ever since the crash of 2008 in the world economy, and most of the major companies went bankrupt and so forth, maybe that is an influence. The QE, the quantitative easing, has had a greater influence in pricing than we realize. So in other words, when we look at currency volume, it's down about 60-70%, like at least 50% it's down since the crash of 2008. And at one point, it was down like 65-70%. Same thing with the New York Stock Exchange and stocks and the NASDAQ and all of them. They all lost over 50% of their volume. Some of them lost as much as 75%. Matter of fact, the only thing that didn't lose volume and still makes records today are option trading. Option trading is doing what it's supposed to do. It's growing. More people become more comfortable with it. More people start to use it, and the volume, record volume every year. And option trading is the most realistic of trading too, in many forms. What I mean by realistic, if anybody wants to know what that means, just say it on the chat line. I'll explain it deeper. If no one cares, then I'll just let it go by as a statement by me. But yes, options are more realistic in defining and expressing trading than any other product out there. A stock or futures or a spot, any of it. A commodity. All right. From there, we go over to the yen. And the yen just keeps on showing that strength, and it doesn't seem to want to give up. Look at that this morning. They drove it down. It looked like it was going to try to get into the sell. It was very close right there. And next thing you know, nope, it bounces. Let's put it up right here on J4X. Right there. And you can see it's still climbing here too. Same thing with all the greens. And the fastest at 86 point, was that 1? And the slow is at 85.3. So it's getting very close to the top end of its range, just when those two numbers start to meet and break and change. And that's what we're seeing there now. So from there, we look at the one, the currency that has been fascinating us for 12 years now. It has been, it has been the currency that, we started following it, didn't expect it to be in that much of a calamity of a problem, and it has done some of the most miraculous action we have seen on any currency pair in the world, and that is the euro Turkish lira. Right there, we're going to show you a monthly, and we'll go back as far as this will allow. Make it the whole screen. You can see back in 2008 it was trading at basically like 1.6, and then the prime minister got in, Mr. Aragon, and then before he knew it, he became president, and you can see how it's changed. And now it's trading at 30 instead of 1 point something. And we've been following it since the 2 area here at Dukascopy. For Dukascopy webinars, we've been following it since the 2 area, and we were stunned then. And we were like, wow, it doubled. It went from 1 point something to 2.6. Oh my goodness. We hope it stalls out, and we started seeing our math. We went. There were years where we went 54 weeks, where we went through a year where it was in a weekly buy. The thing wouldn't get out of weekly buys. It wouldn't, when it got into a weekly sell, it lasted 3 or 4 or 5 months, and then it sometimes maybe 3 months or 2 months, and then turn around and start to go again against the whole country. Sabotaging investment in that country. And then you can see here in 2019, it was trading in the 8s and the 7s and 6s in that area there, and we thought, oh wow, well, maybe this is going to stall. Then we went into a weekly buy again, and it was something like 52 weeks in a weekly buy, a whole year again, and it just keeps on doing that. It just every time they try to help the poor product, the President Aragon with a new policy, it seems to roll over and kill it. And you can see here the product has gone from basically the low ones to now 30. Just saying it out loud is a freak out. So that is really one of the most miraculous, unique situations we've seen in this market over the last X amount of years. I mean, we saw the ruble go from, I guess you could say, we've seen the ruble go from the 50s. The 30s. The 30s and the 40s. We've seen it go from there up until, especially the 30s. And watch it march its way up into the 80s, and we were stunned. But that's only doubling, basically. We saw this poor product go from like 2 to 4, and then 4 to 8, 8 to 16, and then 16 to 31. It was like, wow, what a damage that is to any economy. You can't, your currency can't do that. It hurts the economy. You can't grow. Investors can't invest. They basically have to go defensive. They have to play the defensive game. How to protect their asset so that they have assets and they don't get washed away. Yeah, not the money printing. I keep on seeing Giannis's statement. Not the money printing? No, not the money printing. They're a bunch of crazies. They've come up with some of the strangest ideas in their head. That's for sure. It's not even logical anymore. You can't even logically discuss the poor thing. It's so crazy, That's the weird part out of it all. The logic has been thrown out the door. That's the problem. It's like, wow, how did that happen? How did being unrealistic? And that's like, let's see, I am chatting with other. Okay, about today's expectations. Yeah, I think, there's a lot of earnings coming out and a lot of positiveness. Oh, no, you know what it is? I heard there were 27 different people, even including Powell, the Fed chair, that are speaking somewhere, or maybe it's 21 of them. Either way, it's in the 20s. They're talking today. Everybody's talking. So someone's going to say something that's going to make the markets get goofy somewhere along the line. You know that. As they see the stocks dipping at open and then surging today, but then going down by the end of the week. Yeah, I see the same thing. I agree with it. So same should be for Euro and GBP and gold. Yeah, let's take a look and see. Let's take a peek at that. Let's get this down. Let's make J4X there. Make it daily again. There we go. And as you can see there is the euro today, moving up, finding another way to go. All right, from the euro, let's just show it to you on ours too. There's the euro Turkish lira. You see that? Look, they dipped it at one point today down to 28.5. Somebody got raked. And it's in a daily buy since yesterday. And now it's trading above it again. So they really squeezed somebody. And we've been in that weekly buy since the 28.5 area back here in middle of September. All right, now, was it Janos mentioned the euro? Yeah. There's let's throw the euro back up on the screen. There's the euro. It's trying to get into that daily buy, but it's down at the moment. And the same thing with the cable. Now the cable is trying to make new lows today. That's not good. All right. And then from there, let's take a look at gold, what Janos just mentioned. There it is, right there. And there's the gold. Gold is lifting up a little bit now. Normally, when bonds are increasing in interest, in other words, they're getting, the price is dropping, but the interest rates are rising. The interest rates are rising. Let me just refer to that over and over. But when that happens, usually that puts pressure on gold. So we're seeing just looking at gold act the way it's acting right now says a lot. It says basically be careful that there's going to be some volatility to the market because they're starting to buy that. Matter of fact, I was looking at the volatility index. Let me see if I can put it up on there. Where is that at? Volatility index. But yeah, look at that. They got it down to 73 now on the S&P 500. They're putting more pressure on it. We've been in the sell since hours before the news even came out. They were anticipating a problem. And same thing here. They've been in a sell here since last night at midnight. They went into a sell, and they've been in a sell since. And so you can see these are my 3 intraday charts of the same product, the S&P 500. Let me just turn that on like that. And so you can see when the interest rate, not interest rate, when the product goes into a sell like it did right here on this one. Let's widen that a little bit for you. It dipped underneath the line. The green and the blue dipped underneath the line, puts it in a sell, and it goes down in value. Now it went into the daily buy. Daily intraday buy, possibly right there, did it? 0 and 0 and 50. So basically, it went into the intraday buy there, and lasted 2 bars, and went right back into the sell right there. So, yeah, it's been pressured all day long, and it doesn't surprise me that much. So now, let's take a look at, okay, bing, 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 bing. All right, now let's look at, what else do we look at here? Giannis said to those. Okay, let me just double check, make sure there's nothing else underneath it. Nope, okay, good. All right, let's go over and take a look at, usually we go from the Turkish lira, we go over to the number 1 brick. And that is the South African rand. Now, since we looked at gold already, and we're going to look at all the metals now when we look at the South African rand. So let's put that up on J4X there. There's the dollar rand. Now, when the rand is gaining against the dollar, that's what that is right there, going down. By gaining, it goes down in price against the dollar. And the dollar is losing. And obviously, when it's rising, it's losing against the dollar in the greens. All right, now let's look at gold. Up on the screen, you can see gold is acting relatively firm for a product that, is dropping. You would assume that, you can see like the last 3 days here, it's lifted. And same thing here, it's lifted. It's not running away. And you can see over the last, was that 2, 4, 6, 8 days, went into the daily buy right here. It is flirting. The fastest jumped into a weekly buy, but the slow won't. Again, that makes me very leery to believe that anything's going on but more than a short-term move. And that's the best way to describe it. To me, it's a short-term move. It's not a long-term move that we're seeing right now. And so, unfortunately, this is the time of the year where metals, not unfortunately, this is the time of the year where metals usually perform better. Because of the holidays, people are buying things in India, and another month or so in the United States, but the weekly won't join in. Now, we can take a look at silver here, and it's trying to do the same thing, but our weekly won't join in. The daily's joining in, 3 days in the buy, and it's what's that? 2, 4, 6, 7. 6 out of the last 7 days, it's been in a daily buy. From the $22 area up to almost the 23 area, but it won't join in. We can't get that weekly to pop, and that says to me that this is just short-lived for the times. What's going on at the moment. As I sip my tea, if it was really if the markets were really concerned, we'd see that weekly joining in. And we're not really seeing it join in. And I keep on shaking my head like, why won't it join in? Now you can see here, copper is failing even more. You can see copper's even failing more. Let's see. Right. Let me just save. I'm going to save the silver too while we speak about it. There's the silver. I just want to save that data. And now let's look at the copper. And copper right there, same situation. It's the industrial metal and it's the Chinese metal. In other words, it's the Chinese gold basically. And you can see they're selling it down. So they don't believe, just like the numbers show, the economy is not growing. Sales are increasing. And again, that was the headline number. Wait till we read the internals. I'm sure it'll say something. It'll be like, credit card debt has expanded even greater. It's growing only because of borrowing. It'll say something that makes the markets nervous. Nervous in one direction or another. Okay. All right, from there, we take a look at platinum right there. January contract's been in a buy for 3 days, same way as gold and silver. But you can see here on the weekly, it refuses to do anything. It just doesn't want to do it. It doesn't want to get into that buy. And if we can't get platinum into a weekly buy, it's awful hard to get the rest of the metals into the weekly buy. And that's the South African rand is telling us there's strength right there. It's dropped from the 1906 area down to the 1881 area. Half a handle. And it's still having a hard time getting going. And there's the two internal numbers. The fast stochastic is trading at 26.6 and the slow is at 21.5. So it's doing the opposite of the Hinky-Ashki bars. They're red and this is trying to lead its way up. So in other words, they want to sell. It's trying to tell us that the South African rand wants to start losing again against the dollar. It's trying to lift. And so it shows you that the dichotomy, that's a nice word for it, or the opposition to itself. And there it is right there, the South African rand. Let's widen that out. And you can see today, it's actually up, just like J4X shows. It's up in the big boxes there. 1888, 1887 bids, 1888 bid, 87s are bidding, and again, it's up. It's trying to lift. It's losing against the dollar. So the fact that gold right here, the fact that gold itself is trying to actually lift up today is an interesting sign. Like right there, as we showed you before. It's actually higher than yesterday's number. Let me just double check the exchange on that too. Let me go to the exchange real quick. Look at their chart. And the answer to that is yeah, it's higher today than yesterday. Just the way Dukascopy is showing it also. And that is the gist of it all, really. So as much as we see interest rates rising, and we see gold trying to rise, and it's doing a fair job at it. It's not that bad. It's trying to rise, but it's nothing I would trust because I think it's short-lived. Once they resolve some of these issues globally on a military level, then what will happen is that the stuff will probably fall down again. You would think coming into the season when people buy this stuff for gifts and so forth, which usually pumps it up, but not this year. We're not seeing that at all. All right. Did I do the platinum? Let me save the platinum too, just in case. There we are. So the intraday is moving up, and its weekly is not. And then, like we said over here on the copper, same situation. Matter of fact, it's even trying to take out the low, which is, again, a surprise. It just shows you. Remember, a lot of people were hoping, I don't know, they had this idea in their head that China was a major financial power. And so they thought that, China was going to become they talked about this for years. They thought it was going to become the #1 economy in the world, but it's more like a colony of the United States. If we don't buy from it, it does not grow. It can't grow on its own. So that's a problem. You can't be the #1 economy in the world if you can't grow. You got to be able to grow, and that's even in our most backward times around here, we find ways to grow. All right. So from there, we go look at the energy contracts now. Let's put Brent up on capacity. Look at that. Industrial production. Interesting. That was U.S. stuff that just came out. Interesting. Let's put Brent up on the screen here. We'll go to energies now. There's Brent. Brent was flirting with the 90 area for a while. I heard people talking about that. And we're going to put West Tex Intermediate up on the screen right there. No, cancel. There we go. Let's put that up on the screen. West Texas Intermediate. You can see here, it looks like gold. same chart even. You know, with the big spike. And here's gold. I'll show you the gold. They look identical. Look at them. So it's just the geopolitics right now putting that pressure on it. And then we go over to, let's do it over here. We can put Brent up with our math at the same time. So let's find Brent. What is that? That is BZF, I think it is. Yeah, there it is. There you go. And that's Brent right there, same as right there on the left. And you can see we're trying to get into the buy for the last few days. It's a third day in a buy, and the bar is not reflecting it yet. They're supposed to fix this. We keep on saying that, and sooner or later they will fix it. I will go rag on them to fix it. And then over here on Brent on J4X, you can see it's trading at 83 and change, with the slow trading at 74. And it's 3 greens. And you can see there the strength. You know, it's trying to lift. Ooh, that looks interesting. All right. What else do we got going on here? So from crude, West Texas, we go over to nat gas. There's natural gas right there. And natural gas, you can see, has been breaking down for the last 4 days. And you can see it's been in that weekly buy, though. It did catch, it started off in the weekly buy with the fast and the slow. They both joined in. We went into a daily buy, and it was a winner, chicken dinner. And then it told us that it was at the top on the daily. And it's been, I guess you could say it's been leaking down. In other words, it hasn't been leaking up. It's been leaking down. And so at this point, that's the action we are really seeing here when it comes to the natural gas. All right, now from there, what we do is we jump over to, we usually put natural gas up, and we'll put it right there so you can see it matching on the J4X there. There's gas. So you see it's at the 3.094 compared to like $26 in Europe a cubic. But you can see here, same situation, and they're matching each other the way they trade. And right there. And then what we do is we go over to a natural gas company in Spain. And we're going to put that up on the screen. And that kind of reflects the action in Europe on a live basis for us here. Right there. So you see it's a 26.30 with a 26.27 bid, and it's the same over here. Oh, we didn't get it up on the screen there. We get it on this screen. Here we go. There it is. You see it's trying to top out. We've been red for a couple of days. It's trying to get into the sell now. and it's been playing with the weekly sell this week. It went into a weekly sell, and back into a weekly buy, and back into a weekly sell, which is nice because we're happy to see it top out. We want it to top out. We want to see it to go down because we want prices in Europe to be lower, not higher. And that's, that's unfortunately that's the name of the game at this point. That the cost of natural gas coming into the winter, it's like, oh man, that's the last thing anybody wants is expensive natural gas. Alrighty. And then, where to go from there? So then we look at, well, that does it really. That cleans off our adventure with the energy sector, and for the global, I guess you could say, the global disruption of nervousness of military situations to be in the future. It definitely shakes up a lot of people to the point where you would think that it would be way more higher. At least in my head, I would have thought they parked themselves over the $100 barrel price, but they haven't, which is totally fascinating in my mind, because I would expect to see it up in that area. Instead, Brent is just flirting with $90. West Texas is flirting with $86. We'll show it to you again. Right there. $86. That's the spot month that it's going to go out in 2 more days. So, it does definitely make things surprising in that way. Yeah, and so here we are now. Well, that does it. That's the energy sector. We're going into the winter, and the prices are going to be in more demand. And that's usually the way it works. All right. From there, we slide over to, we can take a look. We got about 2 more minutes to look at stuff. So let's look at the stock markets. There's the S&P 500. It has been trying to lift up into a buy. It refuses on the weekly, as you can see right there. It just refuses. It's been in that weekly sell since back in, where is that? That's August? Yeah. Like the middle of August, up in the 4,550 area. And it went down and it went back up to it again and couldn't get in there. The fast did it right there, but it then rolled over. And our daily was in a sell there for that little dip. Went into a little buy again and failed. And it didn't fail. It did go up in value, but we're in weekly sells really, so you don't want to play with that. And then it goes into a sell here, and obviously it's dropped below this area now. And that pressure is on it. You can see it's been trying to turn up, but we got the fast moving up, and it's broken the high there, but we're not seeing it. There's more resolution that needs to be done in this whole situation at this point. They need to resolve some issues here. So let me think. What else we got going on here? All right. So from there, we'll go to we'll go to the Tech 100, which has all the major companies, and you can see it's been in a daily sell too for 3 days. The weekly was through this morning. It was trying to get into the buy again. It tried to do that last week, and keeps on failing. And when it does that, it says to me, be very careful. It just tells you that it can't get any strength in there. So, if we lift up today, as Giannis was saying, it's going to open a doorway for people to put on more hedges on the downside. All right, that's pretty much it, traders, and we'll leave you with the short-term intraday. You can see here our intraday, like I said, has been in the sell all since last night, and this one's been in the sell since last night. And this is the one we key off of when these match up with that. That's usually, when we get long, as it went into the buy here at 75 and climbed only as high as 70, 76, 77, something like that. 76 and a quarter. Barely moved. And then it threw itself back into the sell here at 74 and has moved as low as 72. They're not moving that much. Again, it would make you think that they are going to try to turn it. So far, this is starting to slope up This hasn't started that yet, and this thing here is just getting kind of. Let's show you the middle one in a full picture. You can see there it's been in the cell since when is that? It's been in the cell since about 3 hours after the London and Swiss Open, around 5:25 our time here a.m. Almost 4.5 hours almost now. It's been in the cell for 4.5 hours. So. All right, traders, we're out of here. We will catch you all tomorrow, same time, same channel. So this is Doc from North America saying happy trails to you until we meet again. Happy trails to you, to all our trading friends. Catch you later, traders. See you tomorrow on Happy to Hump Day.